Alrighty guys, let's go ahead and get started with our first daily live webinar of the week. Let's go ahead and jump right into things, guys. First, looking at the economic calendar for today, not a whole lot to speak on over the next 24 hours. We do have some CPI coming out. We have some quarter-over-quarter CPI for the Australian dollar, so we'll want to be careful with the Australian dollar. We also have President Trump speaking. A couple other things. We have some consumer confidence, Bank of England, Governor Carney speaking as well. So a few high impact news moving into tomorrow. Over the next 12 hours or so, not a whole lot to talk about. So let's jump into our technical analysis for the week. And just by the way, as far as the economic calendar goes for this week, our key risk events are, of course, going to be non-farm payrolls on Friday. As we get closer to Friday, we'll touch on what non-farm payrolls is. Some of you guys may not be familiar with what NFP means or what exactly it is. There's always 3 reports that all get released at the same time each month. Generally, it's the first Friday of each month. Sometimes, on rare occasions, it can be the second Friday of the month, but 90% of the time, it's going to be the first Friday of each month. So we see February 2nd is going to be when non-farm payrolls is released. So without further ado, let's go ahead and jump into our technical analysis for the day. If you guys also have any questions too while going through this, we'll go ahead and answer them in the chat for you. Kevin, I see you want me to break down EURUSD, and I will definitely do that for you. So let's go ahead and look at the dollar index. Keep in mind, guys, that before we look at the dollar index, that pretty much what we're looking at on the dollar index is going to be the opposite of. And when I say pretty much, it's actually a little bit more than, if there was a saying that meant a little bit more than pretty much, I'd probably use that saying, because dollar index and EURUSD move nearly the exact opposite of each other. So the analysis that we go over on the dollar index, you can apply that exact opposite analysis to EURUSD, but we'll also go over both of them. So looking at the dollar index, we are getting that pullback that we were a little bit more biased towards, rather than even more weakness this week. So on yesterday's weekly outlook, if you guys followed me along with that, I mentioned that we had a very big, very weak week. So 2 weeks in a row, very weak week for the dollar index last week. And I told you guys that my bias would be probably more towards the dollar recovering a little bit, looking for a little bit of a pullback and a correction on the dollar to possibly retest the support, the previous lows, also possibly retesting last year's lows. And that seems to look like what the markets are looking to do. It looks like the markets as a whole, which we're going to be looking at throughout this webinar, is seeming to recover. That being said, we're probably going to be looking at opportunities to buy the dollar, which would translate into opportunities to sell EURUSD, potential sells on the Australian dollar, US dollar, the New Zealand dollar versus the US dollar, potential buys on USDCAD, potential buys on USD Swiss franc, potential sells on pound dollar, that sort of thing. So if we look at the dollar index, it's meeting some previous resistance. We can see a little bit of resistance in this area. I think that this pair will, or this index will most likely recover. The dollar will most likely recover back up to the 90.20 level if we continue to see some bullish momentum. I would like to see a bear flag on EURUSD, which we'll look at in just a moment, to look at selling the euro versus the US dollar, which would essentially, like I was just saying, how they do the opposite of each other, that would translate into buying the dollar. So that's pretty much my outlook for the dollar. I think that it's going to continue moving up higher. We have bounce. I believe that is our 61.8% retracement level. Yeah. So from a scaled out technical outlook on the dollar index, we can see from this previous swing, which most of you guys can hopefully see this, the lows over in this area all the way to the top over here. With this move fibbed out, we've got it just tapping the 61.8% retracement level on Friday. That could give us, from a technical standpoint, a bounce off of this area. And I think the dollar is going to recover even higher than the bottom of that 4 hour that we just looked at, which is where this black line is at. I think it will actually come back and test the 50% retracement level. It could even go up higher and retest the range of this higher black mark that we were in previously for a couple years. So it'll be kind of interesting to see where price moves. A couple things I want to remove off my chart at this point, though, guys, since we have broken. I'm going to remove that. I'm going to keep, let's see. Let's look at a couple things on the 4 hour. We're going to kind of clean these charts up a little bit. We're going to extend. Okay, yeah, we'll actually remove this as well at the 90.76. We'll extend this to give us a support level to be looking at, previous support levels, current resistance levels to be looking at. And we're going to extend this daily trend line. All right, let's extend this a little bit. This actually goes up even higher, this trend line, but we'll just stick with this for now. So we have a couple different areas to be looking at. I don't know exactly how the dollar is going to move, but maybe it's going to want to move up to this area, break through here, consolidate a little bit, and then maybe make its way towards somewhere around this zone before moving lower. So my long-term outlook is going to remain quite bearish on the dollar, but short-term, medium-term, I think we can expect a correction on the dollar. Gold. We talked about this yesterday, that we would more than likely see some resistance around the 1350 level. You guys know that. I'm going to actually remove this for now. Let's go ahead and remove, let's see what that guy's doing. We'll remove this for now. And we saw gold bounce off the weekly candle, close just below the 1350 level. And on yesterday's weekly outlook, we outlined a couple areas where we've seen price reverse around this area and create some large bearish engulfing weekly candles, where we saw a lot of momentum to the downside on the following those weekly candles. I think that this week is starting to create that. I think we're obviously seeing a very bearish week so far on gold. That is what we were expecting based on yesterday's analysis, looking for a stronger dollar. And so everything is moving according to plan. Gold, you guys know I'm not the biggest fan of taking positions on gold. Some of you guys may even be a part of Positive Traders for a couple months now, or maybe even half a year. I don't think we've actually placed a trade on gold since early 2017. Just because of the volatility on gold, it's very difficult to get a good risk to reward on trades with gold. But it's very similar to the dollar index. You guys know that, like, I don't actually place trades on the dollar index, even though we have the ability to. I would much prefer to, if we're looking at buying the dollar, I'd much prefer to sell EURUSD because of the liquidity in the market. There's more people that are trading EURUSD, so you're going to tend to have lower spreads because the liquidity is higher in the markets, more volume. So very similar to gold. I'm not really too interested in really ever trading gold, even though I have the ability to. I would much rather just kind of use that to determine the correlations in the markets. I know some of you guys also may trade gold and rely on the analysis that I give out on gold to make your own personal trades. So let's go ahead and look at EURUSD. A couple things we can I actually want to remove off of EURUSD. I'm going to remove this trend line. I'm going to remove, let's see, nothing else. Yeah, I'm actually going to remove, guys. It's time to remove both of those for now, at least. And I'm also going to remove this. Okay. Really clean up this chart a little bit. Let's go ahead and scale out just a little bit more. See if there's anything else we want to keep. Let's put it on the weekly time frame. Okay, so we've got, first things first, we have our swing move where we're kind of finding some resistance around the 61.8% retracement level. So this Fibonacci retracement template on the chart is fair to keep. Both of these trend lines, I think, are fair to keep as well. I think that this major level of previous support and resistance, this green zone that extends pretty far to the left, is fair to keep as well. And I think as well as this zone in this area is fair to keep. So all of that is good. We'll go ahead for now and remove, let's go put this on the daily very quickly. And we'll even go ahead and keep the 120.92.7 level that we have here. This is some previous major resistance where we kind of found a little bit of resistance over here from the previous highs, where we kind of made a little bit of a pullback and then shot up, where this might be a zone where we find some support on EURUSD as it creates its pullback. And we'll keep this channel here for now. We did break out of this channel just for reference. Let's actually see. Maybe we'll remove the channel. Yeah, you know what? Let's go ahead and remove that channel. I don't know. I'm not sure. Maybe some of you guys have your charts exactly as I do. Maybe same colors, same everything. So if that is the case, this is what I have on my charts now. So just a little cleaned up version, just to kind of declutter the charts a little bit and focus more on the actual price action and what the markets are doing. There's also been some different EMAs we've been playing around with. This is a exponential moving average, and this is the 14 close. I'm going to go ahead and just remove that for now and just keep the 50 on there. So going into the daily chart on EURUSD, we can see some pretty clean price action. I think that it supports our bias of this pair weakening a little bit and the dollar recovering. We talked about on yesterday's live webinar how the last two daily candles of last week had a pretty strong presence of sellers in the markets just based on the way the daily candles closed, showing a strong push throughout both of those days from buyers. But ultimately, we saw the sellers step back into the markets and push prices down, which is what creates those long wicks in the markets. So I really like the way that this daily candle closed yesterday. We're going to potentially place a trade on this pair. Actually, I do like the way this daily candle has engulfed very nicely on this pair. I would have liked to have seen this candle close a little bit more bearish. I'm not the biggest fan of, you guys can see that wick on the downside of yesterday's candle. Not the biggest fan of seeing a wick that is so large in comparison to the body of the actual candle. That does still show a presence of buyers in the markets. So I'm going to be a little bit apprehensive of jumping into a trade on this pair. But we have the 4-hour candle close. You guys can see the countdown timer over here, which is 2 hours and 41 minutes. This is also a useful tool, guys. Some of you guys may not have this set up. I think you can actually set this up. Let's see exactly where. I think properties, and you go to time zones maybe. No, let's see, trading, events and alerts. No, it's got to be on here somewhere. Don't want to spend too much time on this. Yeah, right here, guys. Okay, yeah. So if you go to the properties inside, maybe this is standard, maybe not. I can't exactly remember, but if you click on the scales option right here, there is your countdown timer. So you're actually able to see. They don't do it for the daily time frame. They do it for the 4-hour and lower time frame. So you'll be able to see when that 4-hour candle closes. It's a really nice, useful tool. I mean, once you get in the habit, like I know 4, 8, and 12, every 4 a.m., 4 p.m., 8 a.m., 8 p.m., and 12 a.m. and 12 p.m. where I'm at right now in Australia is when the 4-hour candles open and close. But if you don't, know that off the top of your head, if you're doing a lot of traveling or you just want to use this as a tool, you definitely can. But just something that's helpful on there. So we have the 4-hour candle closing in about 2 hours and 39 minutes. So let's go ahead and look and see where the 4-hour candle closes. But if we can get a little bit of a push lower on this 4-hour candle close, if we can get a nice body of this candle, showing a little bit of a strong presence of sellers in the markets. I wouldn't be too adverse about placing a trade on this pair. Let's go ahead. One area of resistance that I do want to mark off is if you guys want to mark off and keep a horizontal line right around the, let's call it the 122.96 area. Oh, I literally just typed in the same thing. 122.96. That's our previous resistance of this consolidation area before we moved up higher on this pair. So I would probably justify this as a current level of support. That's probably where we would look for targets of take profit 1, potentially take profit 2. Kevin, you said exactly what you were eyeing. Excellent. I'm glad to see that there are people in here that are seeing the same things in the markets. It's nice when multiple people can agree on the same sort of bias in the markets. But ultimately, I think our catalyst for selling this pair, guys, is going to be a little bit of a hinting of selling pressure on last week's candle, but I think the nice catalyst and our a good confirmation is this bearish engulfing candle on the daily. So we'll catch up with this pair in about 24 hours on tomorrow's live webinar. We'll look and see where it is. Kevin says stop loss just above the highs of the previous 4-hour candle. Absolutely, yeah. I would have my stop loss somewhere around, you guys can see. Let's go ahead and mark this off. Also, if we're getting nitty gritty and detailed, we can see, even actually extend this a little bit more back here a little bit. Okay, we've got kind of where we bounced off a little bit right here, bounced off right here, found some actual body close in here, and also some body support right there and body support right there, where we're also finding some current resistance. So I think something along the lines of this. This isn't going to be exact coordinates, guys, or exact anything. This is just a general outlook so you guys can have a visual representation of something like how I would have my stop loss, probably about something like that, like a 25 pip stop loss. And that's actually a pretty good risk to reward right there for a trade. That gives us a 1 to 2.8 risk reward. So something along the lines of that. Yes, downwards trend line is being respected as well. Let's see. We can actually draw out that trend line very quickly. Let's remove this as well. And let's throw in a trend line. Yep, we do have that trend line being respected as well. Let's be very careful too, guys. Let's keep in mind that if I do place a trade on this or a trade on this pair on our trade copier, it's most likely going to be, I'm probably going to half the risk. So rather than risking 2% for 4%, I'm probably going to go ahead and risk 1% for 2%, just because of the volatility we've seen in the markets and just the pretty immense weakness we've seen in the dollar. I think that there's a lot of opportunity for market makers to cause, to create some manipulation in the markets right now. So I think that's going to be our in-depth analysis on a pair for the day. Let's very quickly go through the other pairs. You guys should know by now, we've been going over this almost every single day, almost every single webinar. So unless this is your first webinar, you shouldn't have any excuse for not knowing this correlation, that EURUSD and USD Swiss franc have a very negative correlation to each other. I'm going to go ahead for now. I'm going to delete that trend line. We're about 500 pips away from that zone as well. So I'm going to delete that. I am definitely going to keep this daily trend line. I really like, from a scaled out perspective, guys, how we have some major resistance area. Obviously, these two zones right here, it doesn't touch that trend line, but it gets in the zone. We have a touch right here. We have support on the underside and support on the underside. So pretty significant area if and when we make it back up to this area. I'm actually going to go ahead and extend this just a little bit. We can actually clean this up too. Let's go ahead and kind of clean that up a little bit. Something along the lines of that. Okay, I like that a little bit more. So that would probably be a pretty significant area of resistance if and when we made it up to that area. This zone is still a couple hundred pips away, but I think that this is a fair area to keep a significant zone in. And as far as current support levels for, or current resistant levels for USD Swiss franc, I think we can go ahead and take this 4-hour candle and justify pushing it back a little bit towards here. And so this is where I would probably speculate. Let me go ahead and outline it. Probably speculate potentially somewhere around this area where we might get that pullback for USD Swiss franc. If we start to make some pretty big moves to the upside, this is probably going to be where we find some resistance. So I want to make one thing very clear, and I think you guys should probably understand this by now, but when I circle an area on these charts and I say, you know, if we make a pullback up to this area, this is where we'll find some resistance, I mean just that, guys. When I circle an area, I don't want you guys to think in your heads, okay, because David circled this area, I'm going to buy and it's definitely going to go up to this area. You guys have to like listen to the actual words that I'm saying. I'm saying that if we see some movement to the upside, doesn't mean we are going to see some movement to the upside, but if we see some significant move to the upside, which we may or may not, then this is where we will probably see an area as resistance. Okay, so remember, when I draw out something like this, when I draw out an arrow, I circle an area and I give out an area where we may see resistance or support, that's not necessarily my bias, right? I have to, unless I say, you know, my bias would be the market's doing this, then that's going to be my bias. In this case, I do think, though, that the dollar is going to continue recovering, but anything can happen. We aren't getting too strong of a pullback yet, especially, I mean, going back to the dollar, looking at on the dollar index, and if you notice how I just switched between the two, the charts don't look too different. Right? They have, you know, a little bit different move. You know, some candles, some 4-hour candles look different, but the overall move you guys can see on USD Swiss franc, where we move down, have a little bit of a pullback, move down, have an area of consolidation, move down, and we're kind of just stalling in this area right now. If I keep that same drawing on there, it's going to look very similar to the dollar index, right? Literally, I just switched. So we had that move down, we had a little bit of a pullback, move down, a little bit of consolidation, move down, and we have that swing up. Okay, so understand these correlations in the markets, guys. And then if I was to do that exact opposite with EURUSD, right? Exact opposite. We have that big push up, and then we have that dip, and then we move up, and then we consolidate, and we move up, and we're kind of just moving back down. EURUSD is moving a little bit stronger to the downside than USD Swiss franc is to the upside, but it's important that you guys understand how all of these pairs, or at least the ones that we look at, especially these three correlations between the dollar index, EURUSD, and USD Swiss franc, it's important that you guys understand the correlations that these markets have with each other, because you don't want to be caught, you know, especially if you're, let's say you're looking for a long-term trade where you have maybe like a 40 or 50 pip stop loss and you're going for 100, 150 pips. You don't want to, you really most of the time don't want to be buying EURUSD and also buying USD Swiss franc. Right? If you're buying EURUSD, then you're most likely looking for opportunities to sell USD Swiss franc if you're trying to, you know, take two different trades. So there's a reason why I trade the pairs that I do. So let's go ahead and look at pound dollar. I mentioned yesterday that I'm not super interested in trading pound dollar, but we also did talk about them looking bearish. And I think pound dollar is actually going to be providing us with some opportunities. So I really do like the way pound dollar is moving right now. I haven't been a big fan of it recently, but I do like, I'm actually going to remove this right here, guys. We're going to keep this chart very clean, very straightforward, very simple. You know, sometimes I get a lot of, not like necessarily hate, but I get a lot of criticism sometimes for people saying that my strategies are too basic, or that I don't, you know, I don't have, I'm not using RSI. I'm not having, you know, multiple indicators on my charts. And I posted a status on Facebook yesterday, and it said there's many different, let me read it for you guys, because I want to make sure I get the wording right. I said this, guys, and this is, you know, this can be interpreted multiple different ways. But this also can relate to the way that you mark up your charts. I posted this status on Facebook about 10 hours ago. I'm sure some of you guys saw it. It said there are many paths to the top of the mountain, but the view is always the same. So that can be interpreted multiple different ways. I mean, obviously, a lot of people probably relate that to, climbing for success and stuff, but you can also have that same perspective with the charts, right? There's different views and ways that you can look at it, but the opportunity or the outcome is potentially always going to be the same. So this is the way I see the markets. I think breaking it down as simple as possible is the easiest way to approach the markets, and keeping it simple, focusing less on the technicals in the markets, focusing, of course, it's good to have good analysis. It's good to use, obviously have cognitive analysis, have cognitive reasoning behind the trades that you place, but more so focusing on the risk management and the risk reward aspect of trading. So that being said, some pairs we're going to have a lot of analysis, and we're going to have lots of trend lines and lots of zones. On other pairs like this, it's going to be simple. We're going to have a couple different trend lines, and we're going to just base our trades simply sometimes off of just one trend line and price action in the markets. So looking at pound dollar, pretty clean levels for this pair. A couple things that you should definitely have on your chart is on the scaled out view on the daily of pound dollars. You should definitely have this trend line. This is a very significant support trend line if and when price ever makes it down to this area, which it may or may not. We just have it there just in case. And then also on the daily, where we created this top in the past, late last year, then we came back and retested that zone just actually not too long ago this year, and then ended up breaking out to the upside. So that's pretty much all I have on the daily. I don't really see anything else that really needs to be said too much. I think one thing that we actually could point out in this area is we could go ahead from the bottom of here to the top of here, this rally. We could go ahead and fib out this actual rally, and we could kind of potentially figure out what some areas of support and resistance is going to be for this retracement, or more so support. But what I see on the 4 hour is I see this trend line. I see this ascending trend line where we're moving up towards, and we're actually moving to the downside or to the support of this trend line right now. We also have the 38.2% retracement level of this rally in this area. So this is a pretty significant area. I would definitely watch this support trend line. But if we can get a very nice clean retest or a break in retest, a bounce off of this area. So if we can get like a 4 hour trend line or 4 hour candle to break through this area, and we can get a couple 4 hour candles to retest this area, or even maybe come back into this zone, but ultimately closing back. So what I mean to say is a 4 hour trend line potentially even coming back in to above this support and then closing back below it. So what that would look like is something like this maybe. Okay, where the 4 hour candle, maybe we come down, we come back up, a 4 hour candle pushes that during that 4 hours, price pushes into this zone, but then ultimately closes back below this support, which is now resistance. Then we can get like a nice bearish engulfing candle, something along the lines of that. Then I think a move to the downside, I'd be more likely to place a trade on this pair if that happened. But in short, watch this trend line, guys. Watch this 4 hour trend line. If we get a break and bounce of this trend line, then I'm going to be very biased towards the downside. Pound yen, we're actually going to remove both of these trend lines, or both of these support and resistance lines, because that's from back in this area, which is no longer relevant. But what is relevant is the daily candles, the way the daily candle is moving, and I think some more downside is in order for this pair as well. I mentioned on yesterday's Sunday weekly outlook that two last week's candles looked pretty bearish for this pair. I think that we'll probably see a bearish week for pound yen. We've had a pretty big rally recently. We've also broken a pretty significant uptrend late last week. I think this 4 hour candle towards the end of last week really showed us that this move to the upside is really being controlled now by the sellers in the markets. So we'll look for some potential sells. I don't think that this is too bad of an opportunity or too bad of a pair to be looking at trading. So both pound dollar and pound yen, I'm going to be biased towards the downside on. Dollar yen, let's go ahead and look if we can clean up this chart as well. Let's go ahead and move this. Let's go. I'm going to just remove this for now because that's clear with our previous daily resistance. Go ahead and we'll clean up this as well. We'll move that over. We're going to go ahead and remove this for now, and we'll go ahead and we'll just extend this move to the right. Okay, so pretty cleaned up charts on USDJPY. I have 3 things on my chart. I have from this swing, I have this move fibbed out for our 100%, and what's relevant right now would be the 61.8%, and after that the 50%. And then I have this descending trend line, which we're quite a ways off. I mean, not too far off. We're only about 300 pips away from this trend line, so I think that's still relevant if we do make a strong correction, which we may or may not. That's again, that goes back to like what I was saying a few minutes ago when I use an if statement. If price moves back up to this area, this is probably where we'll see an area of resistance. It's also just very clean. We see multiple daily candle closes below this area, so it's a very clean area that I don't want to like forget. That's obviously why we keep the trend lines on there in the first place, so we visually don't forget about those areas. And then this green zone, which has some nice confluence with the 50% retracement level, where we found some support in the past, and then we broke through, came back up, tested that 50% retracement level, and then moved lower. So where do I think dollar yen is going to go? Well, if the dollar continues to strengthen, as we've seen the past 24 hours, if that correction continues to ensue and we see Euro USD also move to the downside, then we're going to see dollar yen move to the upside. I want to look at one thing also. So here's another example of the market correlations. So again, this isn't always going to look exactly the same. You're going to notice this correlation is not as clean as the dollar index to USD Swiss franc, but very similar to what the dollar index is doing, right? You see on the dollar index, you see that pretty strong weakening of the dollar index, like we talked about, a little bit of a pullback / consolidation, push, major consolidation, and then push down, and we're slowly recovering. If we take that same chart art and we lay that over USDJPY, again, like I just said, it's not going to look exactly the same. The dollar index and USD Swiss franc have a much stronger correlation than the dollar index and USDJPY, but kind of similar movements that you see in the markets, right? We see a move down, we see that push up, we see another move to the downside, we see consolidation, we see another move to the downside, and now we're seeing a little bit of a pullback up, okay? So hopefully me overlaying those drawings on the different charts, I know I always talk about correlations, but hopefully that lets you guys visually see why I base a very large majority of my strategy. I wouldn't say like a majority. Obviously, I fall back on price action and confirmation and that type of thing, and trend lines, support lines, resistance lines, supply demand zones, that type of thing. But at the end of the day, I'm also in the back of my mind before I place trades, I'm also understanding, okay, what does this correlation do, you know, in relationship to the dollar? What is the dollar index doing? What is Euro USD doing? And that's going to give me an idea of what dollar yen is doing. So we've talked about all these correlations. So I'm going to, you know, stick with what I said. If we see the dollar index continue to rise, we're going to see this pair continue to rise. If we see the dollar index continue to weaken, we're going to see this pair continue to weaken. Okay. So I'd like to see a little bit more confirmation on USDJPY. We can see that yesterday's daily candle close wasn't, you know, it was bullish. It did show a little bit of presence of buyers in the markets, but it really didn't give us a whole lot to work with. I think a good example of that happening is kind of up in this area where we saw that bullish candle, and I didn't really want to buy USDJPY right away. I want a little bit more confirmation, especially to get back above this 50% retracement level, and then, you know, we ended up continuing falling from there. So don't completely rule out dollar weakness right now. Obviously, we can see that the dollar is very, very weak. and the overall trend with the dollar is still to the downside. So I'm not super interested in just getting in a sell or a buy on the dollar just because we see one daily candle that's bullish. So same thing with EURUSD. Just because we see one daily candle that's bearish and bearish engulfing, we are still in a very, very strong uptrend with this pair. So one daily candle, I'm going to need a little bit more than that. I'm going to need some price action on lower time frames as well as higher time frames to kind of all give confluence to be placing a trade. All right, AUDUSD and NZDUSD. I know AUDUSD may look a little bit confusing. There's lots of lines going through this chart, but I think a lot of them are valid, and we need to keep a lot of these. I think every zone on here minus, I think one thing that we could remove is probably this area for now. That's the only thing I see that we could remove. So I'm gonna, break it down very quickly for you guys on AUDUSD on a scaled out version. I know you can't see the actual candles, and that's fine. We're just looking at overall market structure right now. We can see this high that was originally created over here on this pullback up, and then we saw another push down, lots of consolidation and resistance once again at the zone. We saw EURUSD do its thing, fall pretty hard. Dollar got very strong for a little bit throughout 2014 through 2016. Saw a lot of strength in the dollar, which pulled this exchange rate down. Then we saw a little consolidation for the past 2 years. Throughout 2016 and 2017, we saw a lot of consolidation on the dollar. So that created consolidation on AUDUSD as well. Recently, we've seen weakness in the dollar, so we've seen some strength in this pair. We've seen it come back up to test this resistance trend line. And then we saw dollar weak strengthen just a little bit more, pull back into this range where we'd consolidated for quite a while, and we are back to a weak dollar. So we're seeing the exchange rate move higher on this pair. So that is why I have this trend line in this area. Yes, we have broken this trend line to the upside, right? This trend line has definitely been broken, but if we're going to continue higher, which I think we may continue higher, do something like that long term, potentially. Just an idea that I think we need to retest the top side of this trend line before moving up higher. So especially what we were looking at. So that explains that. Also, very simple trend line right here. We have this support, resistance, and then a potential area of resistance. We may not go to this area of resistance this week or next week. We may actually get this pullback first, but then if we ever do get up to this area, this is potentially where we're going to see some resistance. So that explains those two large trend lines. We also have a horizontal area of support, resistance, and current resistance that we're at. So that is an area where we may see price start to find sellers move into the markets at. So that is a very significant level. And then I'd say the least significant level is going to be this zone right here. It's going to be this green zone. This is some weekly resistance. It makes a lot more sense if you put this on the weekly time frame. And you can see where during the consolidation period between 2016 and late 2017, we saw major resistance, broke out of this area, came back into this zone and moved up higher. But most of this resistance was back in this area. So just a key level to keep in mind in case price does break below. If we do break through this trend line, a different area where we may find some support. So a couple of different things to keep in mind. And then last but not least on the daily, we have our two impulse waves, our up moves that we have seen in this pair. So we saw this move, and I think I drew this out late last week, was this first move watching this trend line, and then now this current move watching this trend line. So watch this trend line, guys. This is what we're watching for. We're watching for a break of this trend line, and then we're looking for the downside. So I'm not interested in necessarily taking a trade right now, especially we have quarter-over-quarter CPI coming out in less than 24 hours. So I outlined this in the beginning of this webinar, right? We have quarter-over-quarter CPI coming out for the Australian dollar. It is also forecasted to be very good for the Australian dollar. Or not necessarily very good, but it's forecasted to be better than the previous reading was at 0.6%. This is forecasted to be 0.7%. So if that happens, and we talked, you guys know what CPI is now because we did an entire webinar on CPI on GDP last Friday. talking about how CPI is kind of the inflation gauge, inflation or deflation gauge in the markets. It gives investors confidence on, is there going to be some inflation happening? Is there going to be deflation happening? What's going on in the economy? So that could create, just because we're getting a little bit of consolidation on this pair, we may actually see AUDUSD move higher. So I'm going to be honest, guys, we are in a very bullish uptrend on this pair. I'm not the biggest fan of placing a trade on this pair because of the CPI that is coming out for this pair. But at the same time, I also think placing a potential a buy stop on this pair would not be the worst idea. We're finding a lot of support after breaking through. This is that weekly level that we just talked about. So we have two different weekly levels of support and resistance. We have this very, very strong wall where we've broken. It's going to be very difficult. I don't think it's just going to be as simple as just dropping down and going lower. I've seen this happen before, guys. I know how manipulation in the market works, and I think that right now this 4-hour candle is trapping sellers, and I think that's also why I'm not super interested in jumping right into EURUSD right now. I think that we could see this push happen one more time. We could see EURUSD make one more push to the upside. We could see AUDUSD make one more push to the upside. We may not see those two correlate perfectly, right? We may see EURUSD want to fall from this area, and we may see AUDUSD want to make a little push higher just because of the CPI coming out strong for the Australian dollar. So this is all speculative, of course, but I think watching for something along this lines wouldn't be the worst idea. Okay. Let's look at NU. NZDUSD, on the other hand, kind of makes me a little apprehensive about placing a trade on AUDUSD because we are getting quite a bit of resistance on this pair. One thing I am going to delete, I'm just going to remove that for now. And let's keep the daily. Let's see on the daily. Yeah, that trend line works. I'm not the biggest fan of this trend line, guys. I'm actually, I'm probably going to remove this trend line because we have this resistance, this resistance, this resistance, even the support in this area and this support. Everything was really looking good with this trend line up until this area. And then I think this area kind of put the nail in the coffin, if you will. It doesn't really give us the cleanest price action around this area anymore. We can see that there's been more recently, which we're more concerned about, the most recent price action is less respective of this trend line than previous price action. So you know what? I'm actually going to delete that trend line for now. We're going to just keep these charts really clean, really simple, really basic. We have talked about this area of consolidation for quite some time. Major consolidation. And I'm looking for a push back to the downside. That's what I'm looking for. Are we going to get that this week? Maybe not. We are finding quite a bit of resistance in this area, though. You guys can see that the previous daily candles, we've been very bullish for the past 6 or 7 weeks on New Zealand dollar, US dollar. But quite recently, last week and beginning of this week, we found a lot of resistance in this area. So I do recognize that on the 4-hour, we have technically broken this trend line on the 4-hour. But here's the thing, is this trend line for me is not drawn on the 4-hour. It's not based off of what happens on the 4-hour. It's based off what happens on the daily. And that is the key thing to remember, guys, that, yes, we drew this on the daily. Yes, right now on the 4-hour, we have gotten a little bit of a break of this area and we're retesting it. But to me, that doesn't really mean much. Okay, what I see more happening right now is and I'll go over this, I see this happening. There's kind of like this wedge being created. All right, if this wedge continues, if this wedge breaks to the upside, then I'm going to expect a little bit more upside on this pair. Okay, so don't get confused. For me to want to place a sell on NZDUSD, I would need a daily candle to make a big push to the downside. I would need something like this for me to be interested in selling NZDUSD. right? Because we're probably, if that happens, we're probably going to see a push. We're probably going to see some sort of consolidation, maybe a retest of this area, and then moving lower. Okay. So my bias on AUDUSD and NZDUSD is be careful. Okay. I think that right now, this is just my personal opinion, guys. We know that the markets are manipulated. That is a fact. Okay. We know Forex is actually probably the most manipulated financial markets in the world. Okay. And we also know that banks know that we, as retail traders, which is who they're trying to take money from, banks, hedge funds, they're trying to be on the right side of the trade, right? Market makers, essentially. Brokers are, if you guys don't know, brokers do their own trading, right? There's this term called A booking and B booking, right? Most brokers B book, where every broker can see the plays that are traced, right? Every single broker can see every single person that's placing a trade, right? They kind of have like an unfair advantage, and they usually will tend to hedge the position of whatever you're taking by taking the opposite side of the trade. So if you place a buy on New Zealand dollar, US dollar, they're probably selling you New Zealand dollar, US dollar. Okay. We won't really get into that right now. I think that's something I can cover on a different webinar, market makers and A booking and B booking. But brokers, believe it or not, take their own trades. They have their own funds that they trade. Okay. And they don't want us to win, right? If you look at us in an ocean, we are minnows. We're the tiny little plankton at the top of the water. And there's sharks, there's whales, there's way other bigger things that move the markets and are more important in the markets. So they are trying to eat us. So that's, I know, kind of a kid example, but it's the real way to explain the markets, guys. We are very, very tiny fish in a big pond. Okay. So that means, manipulation is the biggest thing to go against us, right? Manipulation is huge in the market. So where am I going with all of this? Well, the market manipulator, the market makers, the people that actually manipulate the markets know that retail traders, most of us trade off of, technical bases, so that we see things in the markets, and, we get very dead set on that. And then we trade that. So, I think a lot of people right now, especially with, an example of NZDUSD, is seeing what's going on. They're seeing this resistance in this area. They're seeing a big push. And I think every single person right now is expecting a sell on New Zealand dollar, US dollar. Most people right now are just, probably over leveraging accounts, selling everything they have, because they're like, it has to go down, right? It has to go down. It's gone up too far. It's had a 7-week rally. It's had some major resistance in this area. So a lot of people are dead set, very hard-headed on that need to sell this pair right now. But I don't think so. I think it may have one more push to the upside. Now, does this mean the dollar is going to continue to weaken? Maybe not. Right? We might see the dollar continue to weaken, right? Most likely, though, right? Most likely, if we see this pair go higher, we're going to see the dollar weaken. We're going to see EURUSD move higher. Most likely. Okay. So this is a good example of why we also did not place any trades this week, is because there is some mega manipulation going on in the markets right now. All right. When you see high volatility, you need to be careful. All right. You have to remember, there's 52 weeks in a year. 52 weeks in the year. Okay. We take a couple weeks, right? Even if there was 1 week a year. 1 week a month. So 12 weeks out of the year that we didn't place a trade. That's still 40 weeks of opportunity in the markets. Okay. So you guys have to change your perspective, right? Some of you guys, I actually didn't have anybody freak out like we used to, right? We used to have weeks where, we would not have a trade and people would be like, why aren't there any trades? Blah, blah, blah. I'm not getting my money's worth, blah, blah, blah. Well, guys, if you're looking at this group from a monetary standpoint, right, especially if you're like a monthly, that's why I do the lifetime membership, is so you guys don't have to focus on the money. You can focus on the strategy, focus on the skill set more than the money. But if you guys are a monthly member, you're paying $97 a month and you're focused on I need to make that $97 back, you're in the wrong business, guys. You're already in the wrong mindset. You need to be in a student of the game mindset, realizing that these webinars that we go over, this is priceless information, guys. You guys are learning from somebody that does this for a living. Okay. I have a track record. I have a multiple six-figure account, that people that are around me, I've networked with some of you guys in real life. Some of you guys listening to this, you guys have met me in real life. You guys have seen my live account with over $200,000 in it. Okay, I am walking, living proof that my strategy works. And my strategy is focused on a couple things: patience, risk management, risk reward. Okay. But it's a good combination of everything, right? I don't have, you guys can see my, I'm not going to go and do a big rant, guys, but you guys see my analysis, right? It's nothing super crazy. I keep it simple. I just keep simple support and resistance, break it down. And that's the biggest thing I want to get to you guys. There's the secret to winning in Forex, the secret to being successful isn't mastering reading a chart, because no matter how good you are at reading a chart, there's going to be times you're wrong. That's the part that you have to understand. The secret to success in Forex, long-term serious wealth building success, is your risk management and your risk reward. And that is it. That's literally it. And obviously consistency, right? That's a given, right? Being able to do that over and over. You can't have good risk management and risk reward for 1 year, have some success, and then year 2 you think you know it all because you made a little bit of money, and then you start over leveraging again, and then you're back to square one, right? You have to always go back to the basics and be consistent. Okay, so that's one huge thing I need you guys to understand. Okay, so that's it. That's my little rant for the week. But remember, NZDUSD, we're in this little bit of a wedge. Keep this on your watch list. We have broken through that resistance. I think that from a manipulation standpoint in the markets, a lot of people see that there's a lot of resistance in this area. A lot of people are over leveraging, selling in this area. And I think that there could be one more push. And I think that push could potentially be equal to where you would see NZDUSD stop is where you would see AUDUSD stop at. So if AUDUSD comes up to this area, wherever that price is on AUDUSD, NZDUSD is probably going to stop around the area too. Okay, because NZDUSD doesn't have like a super clean trend line, doesn't have like an area of resistance above it. So that's how I would use, that's a little secret right there. That is how I would use the correlation of the two to each other, right? If I'm like, okay, well, if I'm going to buy NZDUSD, how high is it going to go? I have no clue, right? I have no clue how high it's going to go, but it's probably going to have a little bit of confluence with what AUDUSD does, right? If we see AUDUSD pop up to this area and then ultimately end up falling, well, wherever this area is on AUDUSD, at the same time when AUDUSD is at that area, we're probably going to see NZDUSD at that exact same area as well. Okay. Let me know, guys. Is this valuable stuff? I hope you guys are getting some valuable stuff out of this. So hopefully you guys are. USDCAD. USDCAD, not super interested in placing a trade on this pair. I do want you guys to recognize one thing, that from a downside perspective, we do have some major resistance that we're going to need to get through. Okay? Because we had that bounce. Obviously, you guys can see this big move. Okay? And then this retracement down to the 61.8% retracement level where we found some support, ultimately broke through it last week. And now we actually retested that. We kind of broke down, came back up, retested it. Okay? So be careful. These markets are tricky, guys. Okay? These markets are not easy. Okay? These markets are not always the easiest to read. It can look like it's going one way when it's really going the other way. And we need to be careful with that. We need to recognize that fact. Let's look at the weekly, which we talked about yesterday. Look at this trend. Look at this, the past couple of weeks, right? We got a very nice dip on USDCAD. We got a little bit of a pullback in last week. I think last week was a very big hint at what can happen this week on USDCAD. We have that very, very large bearish engulfing candle last week. I wouldn't be super, headstrong on buying USDCAD right now, even though we've been looking for a pullback, even though we've been wanting a correction. Guys, it's a psychological factor. Why? It doesn't matter how much we want it, right? It doesn't matter how much we want or how much we think it's going to happen. It matters what the markets are doing. It matters what they're actually doing. Okay, remember that. Remember the psychology. Okay? gives me goosebumps when I talk about this stuff, when I think about it, because it's so true, guys. We really want, sometimes we want to be in our own world. We want to like think how we want it to be, right? How we want the markets to be, but the markets aren't always going to do that, right? They aren't always going to move in our favor. They're going to the markets move on their own in absolutely no relationship to what we want them to do. They'll move. And if we can happen to be on the good side, and we can, that's the key, okay? So watch USDCAD. I don't know if it's ready to make a big pullback. This area right here, this 61.8% retracement level, which also happens to be this major area of support and previous resistance, is a very key level on USDCAD. Very, very key level. All right. So watch this pair. If we consolidate around this area, we may look at dropping. Okay. If we do end up having a strong push through this area, and maybe we get a retest in this area, and then we move a little bit higher, get a little bit of consolidation, then maybe at that point, I'd be looking to buy this pair. But the markets are not easy to read right now. Okay, or I'm sorry. Not difficult to read, are not the easiest to trade, right? It's not as simple as just jumping into a trade. And and you guys know, some of you guys that have been in Forex for maybe maybe you're going on like going on your 1 year, 2 years of Forex. Maybe you guys know. You guys should know that. Sometimes it feels like you have no clue what's going on in the markets. Other weeks you have a very, very good grasp of what's going on in the markets. And this is kind of like one of those weeks where it's like in between. Last week was, whoa, like what is going on in the markets? Crazy volatility. U.S. government's closed, all sorts of things. So just stay out of the markets. This week it's like, okay, things are happening. We're getting a little bit of hints. We're getting some clues in the markets, but things are not clear as day right now. And so we revert to the sidelines. We watch and see what happens. So that's pretty much it, guys, for today. That's my little, little stuff. I think I dropped some nice value on here for you guys. So let's watch. We talked about some setups. Let's be careful, though. Okay, let's be careful in the markets. Don't disregard how strong and how powerful trading with the trend is. Okay, I know we're a couple different things we talked about. We're looking to get on the opposite side of the markets right now. Potential sells on EURUSD depending on the way it sets up. That was pretty much the only one that we talked about getting on the opposite side. But at the same time, this overall push of a weak dollar may want to continue. Okay, guys? Kevin, you are absolutely welcome. All of you guys on here, Jishan, Jonathan, Marco, hope you guys got a bunch of value on here. Guys, everybody else watching this, I hope you guys get a lot of value. But that's it, guys. That's really all I have for you. So remember, set your greed in the markets aside, right? Focus on the power of compounding. Right? If you ever get discouraged, right? This is why I keep this bookmarked, guys, because I know this stuff, but it's nice to show it. If you ever get discouraged, go to the compounding calculator, right? Put in that $1,000 that you have right now. I'm sure some of you guys watching this have more. Some of you guys might have less, but I think a nice, good thing I hear most of the time with people that are maybe somewhat new to Forex, trying to understand things, have about $1,000 to invest into Forex. So take that $1,000 that you're looking to invest or that you have invested, put in that 5% a month, put in the next 10 years, and look at the numbers, right? Keep in mind, the biggest thing, I know I always say this, but this is the last thing I'm going to say before I let you guys go. Keep in mind, some of you guys might say, oh, wow, well, I'm only going to turn, $1,000 into $350,000 in 10 years. Well, yeah, okay. 10 years is a long time. But in terms of your life, it's not really a long time. But or in terms of like investing, if you talk about like a retirement account, it's not a long time at all. Those things are 20, 30 years long. But keep in mind that this is literally never, ever, ever putting in more than $1,000. Ask yourself, if you put $1,000 and you were consistently growing it, or someone was growing it for you, like having it connected to a trade copy or whatever, was averaging 5% a month, and you saw that consistent, after 12 months, you saw a 60% gain, you saw that the risk was low, you saw that they're being consistent with giving you your returns, and you have 5%, are you going to just stay with that $1,000, Probably not. Chances are that if you see some decent returns, you see some consistent returns with $1,000, you're probably going to put a little bit more money into it every single time, right? Every couple months, you're probably going to put a little bit more in. So keep in mind that if you're telling yourself that this $348,000 after 10 years isn't a lot after waiting 10 years, well, I would say that say to the contrary, that that is a lot. But then the second thing I would say is that you probably aren't just going to put $1,000 in, right? You're probably going to maybe put in $1,000 a year or $1,000 every 6 months after that, and let that compounding accelerate, right? You look at the same number with $5,000. Start with $5,000, which some of you guys might be a lot of money. So some of you guys that might be not a lot of money, right? We have people that are connected to the trade copier that have $50,000, $100,000, $250,000. There's people with the trade copier that have $500 and $1,000. So I'm speaking to everybody right now. So you have $5,000 in there. You go at 5% a month. After 10 years, you have $1.7 million. Okay. Same thing. If you're starting with $5,000, you obviously probably have some sort of capital, or you have some way to create an income. You probably aren't just going to keep $5,000 in there. You're going to continue to add money to it over time. And that is the key, is the compound interest over time. Marco says you always look at this. That's $35K a year. Most people only make that a year. I mean, technically it's $35K a year. Obviously, the final returns we produce. Exactly. Yeah. So it compounds. But yeah, like the way you break that down, it breaks down to like $35K a year, which is like, yeah, like you said, like some people aren't even making that in an entire year. So that's it, guys. That's all I've got. You know, focus on that patience. Focus on that compounding. Focus on, you know, you don't always have to be in a trade. It's not always about being in the markets. It's about sitting on the sidelines, looking for the opportunities, applying the knowledge that you have. So without anything else, guys, you know, without risk management, you know, we wouldn't have, you know, success in the markets. So keep that in mind, guys. I'll see you guys in 24 hours on tomorrow's live webinar. If you have any questions, please feel free to reach out to me. I'll make sure to find some time to always reply to your messages. Other than that, guys, take care. Have a good evening, morning, afternoon, wherever you guys are at. Take care, guys.